The reality is we don't know what's going to happen, but we have an idea of what we think is going to happen, and we base that idea on a bunch of data. But the main things that I want to talk about are the housing markets. And if we're looking at 2015, there's a whole range of forecasts out there ranging from a little over 1 million to 1.5 million units of housing starts for next year. And we are at the low end of that. And in fact, we've been at the low end of the forecast for a couple of years now. You know, if you're expecting housing starts to get back to 1.4, 1.5 million, it's probably not going to happen next year. Having said that, they will get back to 1.4, 1.5 million. It's just going to take a little bit of time, sort of 16, 17, 18 time frame before we get there. I know you guys maybe don't export to China, or you're not selling logs to people who export to China, but it's become a very important market for North America. And if that wood wasn't going to China from, say, other producing regions, it would be here competing with lumber produced from your logs. If we think that housing starts are going to get back to 1.5, 1.6, 1.7 million units, which we do think, then demand for lumber is going to surge. And we're going to need an extra 15 to 17 billion board feet more lumber than what we have right now. So where is that going to come from? And then the Canadian dollar. If we go back a year ago, the Canadian dollar is at parity. You know, 2 years ago, it's down at 80 cents. And if you look at the data, historically, the Canadian dollar has been very closely tied to oil prices, and so I want to talk a little bit about where we see oil prices going. So what is the data out there that tells us that housing starts are probably going to be a little weaker next year than a lot of people think? And there's really three things. One, lending standards remain really tight. Two, there's really no evidence yet that there's strong demand for housing. In fact, the evidence is that the demand for housing is pretty weak right now. And three, even if the demand for housing came back, there are definitely supply-side constraints. This is a fantastic slide, and what this shows is, the red line right here shows the weighted average credit score for people getting single-family mortgages. The blue bars is the percentage of loans for people with a credit score of below 700 if you go to the top, and then we break that out between, you know, less than 660. And 660 to 700. So who are getting loans? And you can see that the average credit score for people who are getting loans are up around 750 to 760. Does anybody have any idea what the average credit score is for US? It's under 700. For people who have an average credit score, less than 15% of them are getting the loans. So this is just an indication of just how difficult it is to get a loan. It's very difficult. And that there's actually been a really big improvement, but it didn't occur until it's occurring right now in the third quarter of 2014. Another reason for pessimism is the fact that demand for housing is not there. So what is the demand? Well, if we look, these are new single-family home sales. The average of the last 6 months is 425. 425,000 homes were sold. So that's not a lot of homes getting sold. And if we go back to the beginning of 2013, it's the average is 429. So not a lot has changed. But the thing to look at, and the thing we tell our clients over and over again, is watch that single-family home sales number. Because if you're sort of making your plans around, 1.2 million in terms of housing starts, and you don't see the single-family sales pushing up towards 560, it's not going to happen. Housing starts are going to be a lot lower. So this is a key number that you need to follow. When I talk about why we're a little bit pessimistic for next year, the trend has not been good for the past year and a half, really. We see this sort of downward trend in sales. So we need to see this stabilize, reverse, go back up. So a final reason for pessimism for next year is the fact that there are definitely supply-side constraints towards building a lot more homes. And this shows you, two constraints are labor availability, and you can see that 65% of builders say that they have trouble with labor, getting labor and actually having people stay on the job. And then land as well, another constraint. And this is buildable lots. So it's going to take time to get those lots in the condition where you can build them. From an overall macroeconomic perspective, things are definitely starting to look up. And this is just GDP, and you can see that we have the economy growing faster over the next couple of years. Why is that? Well, there's a lot of reasons, but for one thing, people are wealthier. People feel wealthier. And one of the areas where we've seen wealth increase dramatically is home equity. So this is home equity, the black line, and the red line's trend. You can see that for home equity, we're actually back above trend. For most Americans, their wealth has increased rather dramatically as home equities come back. More importantly, jobs have come back. This year, starting in February, they bounced up, and we kind of broke free of that high 180s, and we got into the mid 200,000 range. The average was 245. So jobs had broken free, and what does that mean? 245,000 jobs a month? Well, that's 3 million new jobs a year. That's a lot of new jobs. So as jobs come back, people are going to start to replace these durable goods, and we've already seen it. You know, auto loans are way back up again. Car sales are way back up also. So we're starting to see things improve. And back of the envelope calculation, just so you know, is that for every 2 new jobs, 1 household is formed, generally speaking. So that's 1.5 million households. And what does that mean? Well, by definition, if a household is formed, they need to live somewhere. There is no inventory of homes for sale. They're just slightly above where they were in '67 when we had 100 million fewer people. So, you know, so what does this mean for our forecast? Well, things are going to improve. This year, not going to be that great. And next year, though, however, we do see them housing starts getting back to about 1.2 million. For a number of years now, we've actually been underbuilding. And to the extent that we've soaked up all of the overbuild, and we now have pent-up demand of about 3 million units. And what does that mean? What does it mean to have 3 million units of pent-up demand? Well, every year our population grows by 3 million people, right? But we've been building 600,000, 750,000, 900,000 new housing units. But we've been adding 3 million people. So what does that mean? Well, that means that people are living together. And you know, if you have kids who are 20-somethings and you're unlucky, then you know what I'm talking about because they're probably living in your basement. This is an amazing statistic. The unemployment rate across 25 to 34-year-olds is 7.6%. 25 to 34-year-olds who are living at home, it's 27.5%. So that's what's going on. And it's not just kids living at home. 2 years ago, the government did a study, and they saw doubling up for non-related households, doubling up for young children moving back in with their parents, and doubling up with parents moving back in with their children. So a contraction of several million households. That's what all this pent-up demand is. So what is the sort of long-run trend demand for housing? What is normal? So to answer that question right away, normal overall demand would be about 1.6 million, but about 100,000 of those are for mobile homes. So a trend demand number, a normal demand number for housing is 1.5 million. So how do we get there? Well, most of that demand comes from household formations. It's this fact that we add 3 million new adults, they have to live somewhere. So as household formations come back, at first we're going to start soaking up some of that inventory, but eventually that inventory, that excess inventory is going to be gone. And how do we get there? Well, this is just a little table that tries to put some time behind, a little bit of a time frame behind when we're going to get there. And what this shows is household formations, pretty conservative number given that employment's coming back so dramatically. Remember, we're going to add 3 million new jobs this year, and so that would historically have translated into about 1.5 million new households, but we're looking at about 2/3 of that, so not getting anywhere near that. So this is demand for new units. So every household that's formed is going to take up a unit. We're going to lose some through natural disasters, knocking houses down, man-made disasters. We'll have a little bit of inventory change, and this total equals your total demand for new units. And from that, we have to subtract housing starts. So you can see that starting from our base of about 1 million excess units last year, we're going to subtract about 500,000 this year, and then another 500,000 in 2015. So by the end of 2015, getting into 2016, these excess units that are out there will be all soaked up, assuming that households form at a rate that's well below historical levels given employment growth. So what does that mean for starts? Well, we expect starts to, again, so next year about 1.2 million, 15 about 1.4 million, so staying below this long-term average, and this long-term average happens to coincide almost exactly with our underlying demand numbers that we arrive at looking at household formations. So it's really not until 17, 18 that we get above. But when we get above, we're looking at getting back to sort of 1.7, 1.8 million units of housing starts. So what does this mean for producers in terms of domestic consumption? We're looking for going from 48, 49 billion board feet up to 65 billion board feet. So we are going to need to produce a lot more lumber to supply the domestic market. It's a fact, it's going to happen. The points to take from this are, one, that we are going to get back to much higher levels. Two, it's unlikely to occur in the next 2 years. Three, it's very likely to occur in this decade. I'll kind of go through China really quickly because I do think it's interesting in that we saw tremendous growth in exports to China. Why is that? A lot of people said it was because of all these efforts of the BC industry to get into China, and certainly that had some effect there. But the real reasons that we saw, there are three reasons. One, the fact that Russia, the traditional supplying source, if you look at it historically, this is where China got all its logs. They got them all from Russia, right? Russia imposes a 25% tariff on log exports, and what does China do? Well, their costs just went up by 25%, so they look for alternative sources. So we see other regions' log exports start to surge, and Russia's coming off. Another reason why we saw log exports surge is that BC has the mountain pine beetle. I won't get into this too much, but essentially, there's a shelf life. We saw a tremendous amount, almost 700 million cubic meters of fiber killed. That fiber has a shelf life. The producers need to turn that fiber into lumber, or it's going to be gone. It's going to turn into compost. And how long does it take? Well, somewhere in this 9 to 12 year range, you're no longer able to turn that timber into lumber. So they needed to process that before it got to be 9 to 12 years old. Well, what was happening in this 2008 to 2012 period? Well, there was a tremendous amount of fiber that was less than 8 years old. But looking forward, they were seeing a period within 4 to 5 years when that fiber wasn't going to be there anymore. So there was a tremendous push from the BC producers to sell their logs or sell their lumber in China. And then a final component is there's also just a tremendous amount of supply that became available with the collapse of the U.S. housing market. So we went from domestic consumption of 75 billion board feet down to 40 billion board feet. So that's 35 billion board feet of lumber that we were producing that within 4 years we just there was no demand for. So you had much higher log costs from regions that had historically been supplying China. You had much lower demand for North American produced lumber domestically, and you had this ready supply from BC. Well, what's happened going forward? Well, for one thing, the export tariff has been reduced, cut in half from Russia. For another thing, domestic consumption is starting to move back up, and production is obviously way down to meet, to get back in line with domestic production. And if we go to this chart here, you can see that we're now entering the period where there's less and less of this fiber available. So we're actually starting to see, we're not seeing a decline in BC production, but we're not going to be able to see a big increase. So BC is no longer as concerned with producing lumber and shipping it to China. And so what we've seen is exports from North America actually really stabilizing, and pretty much all of the growth coming from back from Russia. A couple other reasons to be concerned about China is, one, economic growth. You can see their economic growth has been tapering off, and there's a lot of evidence that it could actually, you're not going to see China go into a full-fledged recession in their actual GDP statistics because the government won't report that, but you could see it in the oil prices, and just as importantly, you're starting to see it in the housing starts. So these red bars are the housing starts, and you can see they're starting to decline. And why is that? Well, let's look at some of these, let's look at some regions around here. Where do you think it's expensive to live? Well, we think it's expensive to live in New York, Toronto, San Francisco, all sorts of stories about how expensive San Francisco is, right? Vancouver, same thing. Well, London and Paris are tremendously expensive. Well, this is Shanghai and Beijing. This is the home price to income ratio in Beijing is more than 3 times what it is in New York, 4 times what it is in New York. So it's very expensive to buy a home in China, and because of that, people aren't buying homes. That's why the housing starts are going down. So longer run, we think that demand from China is going to decline, and so exports are going to come off, which is a good thing, actually. Why is that? Well, we need 17 billion board feet of, if we're going to have 17 billion board feet of increased domestic demand, so where is the supply going to come from? Well, a portion of that supply is going to come from the fact that exports are going to come off. We're just simply not going to be able to supply those export markets. A portion of that supply is going to have to come from imports. But the bulk of that supply is going to have to come from domestic production. So 15, 16 billion board feet is going to have to come from either you guys or the guys you sell your logs to. It's not going to come from BC, because remember, this is between now and the peak in 2017-18. So if we look at the sort of 17-18 period, it can't come from BC because BC's lost its ability to dramatically increase its production. It can't come from Quebec or Ontario because if we're going back to when the peaks were, there's been a huge decline in the annual allowable cut from Quebec. In Ontario's production, they've refocused away from traditional wood products like lumber and towards areas like bioenergy. We can look at Bill 57, which has already occurred, and big drop, and then there's the newly renamed North for All plan as well, which is likely to result in some loss. I mean, it could result in up to 25% loss in the AAC, but we think it's going to be a lot. I mean, if there is a loss, we think it's going to be a lot lower than that, and pegging it closer to 5%. So where does it have to come from? It has to come from the U.S. And it can come from the U.S. because there's a lot of deferred supply. And this is just broken out into the major regions here, the coast, inland. This is all U.S. West, coast, inland. You can see that this green bar shows you the average harvest level in between 2000 and 2005. And the blue bar shows you the actual deferred harvest. So you can see that in the south, for instance, it's more the deferred harvest. So the inventory has grown by more than a full year's harvest level. It's actually grown by a third more than that. So what does that tell you? Well, if you increase production, if you increase your harvest levels 20% more than your average of the 2000 to 2005 period, it would still take you, 6.5 years to soak up all that inventory that's been built. And so where do we see the production coming from? Well, we see it coming back in the U.S. West. This is the coast and the inland region. A lot of the West Coast guys and inland guys say there's no way we can get there, to which I say, well, look at this. This is where this is where this line shows you your peak level of production here, and we're saying that you're going to get back to below that peak production. In the South, we do go above the peak production, but there's been a tremendous amount of investment in the South, hundreds of millions of dollars of investment in the South, and they continue to flow. The investments continue to flow in, and the fiber's there. So we will see some production coming from the South, but it can't just come from the major producing regions in the U.S. We're going to have to see increased production coming out of the Northeast and the North Central as well. So this is the other U.S. This is you guys. So we're going to have to see from where we're at today about 1 billion board feet more lumber production in order to meet the demand levels. And remember, this is pretty conservative. We have exports declining. We have imports going up by roughly 1.5 billion board feet. So even with that, we're going to still need 1 billion more feet coming from our region. So you might say there's no way we can get 1 billion board feet. This is the DC ratio. Production, so we have this is capacity, this is demand on North American mills. You can see that if we're right that housing starts going to go back to that sort of 1.7, 1.8 million unit level, we still have some demand coming from China. We have some supply coming in from Europe, but still we're going to push operating rates up into the 93% range, 93, 94% range. So they're going to be in the mid 90% range. So that's going to be very tight operating rates. So the market's going to be very strong. The Canadian dollar is going to remain weak. This is the Canadian dollar in red and oil prices in black, and you can see the very tight relationship between the Canadian dollar and oil prices. And what's going on with oil? Well, two things have happened with oil. We've found a tremendous amount more supply. There's the Bakken Shale in North Dakota. There's the Eagle Ford in Texas. So if you go back 5 years ago, Saudi Arabia had the most known oil reserves. Now Venezuela claims to have it. So Venezuela went from 100 billion barrels to 300, so they claim 300 billion barrels of proven reserves. In addition, consumption has come off some as Chinese growth and Asian growth has slowed. So because of that, forecasts for oil prices have been revised down. This is an indication of demand. This is miles driven, and typically when you have a recession, you see miles driven have come off. After this recession, miles driven have come off, but they've just basically moved sideways after that. They haven't come back again. Average numbers of driver's license for kids under 21 are way down. People aren't driving as much, so the demand is down as well. So because of that, we see oil prices, and these are real oil prices in black, we really see them sort of trending sideways to being slightly lower. So we see the Canadian dollar bouncing between this 85 and 95 cents. We don't see it going back to 95 to 101, which is where we were at, right around parity. I would urge caution for next year in terms of where you see consumption going, domestic consumption going, because it's unlikely that housing starts are going to surge next year. They're probably going to remain fairly low. Long run, I'm just going to leave you with a thought. We add 3 million new people every year. At some point, we need to build houses for them. We've been adding. So if you look at this relative to when the recession started 8 years ago, we have 24 million more people than we had 8 years ago. We have a few million more housing units. That's it. So we are going to need to house these people. Housing starts are going to come back. They're going to come back strong, and we're going to need to provide a lot of lumber to meet that. Net exports are going to have to come off, so they're not going to be as much of an effect on the markets and as this demand comes back, because we're simply not going to be able to supply it. Where is that supply going to come from? It's going to have to come from the U.S., and to some extent it's going to have to come from you guys. When is it going to happen? Like I said, unlikely to happen in 15, probably not in 16 either, but once you get into the 17, 18, 19 period, it's very likely to happen. So thank you guys very much. If you have any questions, you can feel free to call me or email me.